Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 3:20 in New York. It is Thursday, 10th day of March, 2016, and this is the Daily Report for Gold and Silver. Tremendous rally in gold and silver. We do have platinum and palladium actually trading lower on the day. Most of this is due, as you'll see during the broadcast, to dollar strength, but nonetheless an impressive rally on the heels of an announcement by the ECB in which more quantitative easing seems to be their next play and possibly even their final play, because they've reduced interest rates to a point where Draghi came out and said that he doesn't expect interest rates to be reduced again. They're really using the majority of the tools in their tool chest. First, to gold. Currently trading at $12.68 and change. Puts it up about $15 on the day. We'll go ahead and put up a Kitco Gold Index chart so you can really break down how this net change of $15 is actually working out in terms of what is dollar weakness and what is actual buying in gold. And I think you'll be surprised by the numbers. The low today, 1237.24, and the high 1273.36. So quite a range. I'll also talk to you about, as this market went up, I did consider buying the breakout, and I'm going to show you a chart, which is what kind of kept me holding back. Also, we'll talk about what our next play in the market is and what we're looking for in the next week ahead. So traders, if you recall from yesterday's show, we had just pulled profits on our long position in at 12.17, out at 12.54. The market actually overnight traded much lower. As you know, the low was 37 on the day. Now, we're looking at a very, very short-term chart. In this chart, it's a 30-minute chart, Japanese average format, and you can really see this is that low that came in the nighttime session, half hour by half hour. You can see, look at the size of these candles when the market first broke to the upside. But by the time they hit New York, we were really in a point in which we saw diminishing candle size, return of lower wicks, and then we got very, very small body sizes as it came up and hit these highs at around 1274. And that's really what kept me from buying this particular breakout. Now, in terms of what we're looking at, realize we're not always going to be in the market. We're not going to catch all of the big moves, but the idea behind trading effectively is trading profitably. Trading profitably does not necessitate catching every single move. As much as I would like to, it's simply not humanly possible. Now, in terms of what we're looking at now, we've definitely broken out of the range. This large spike, I believe, has the potential to backtrack anywhere between, call it 64, 65. That's a 23% retracement of this move, down to a low of maybe 59. So if we can see the market dip between 64 and 59, at that point, I would look to buy the dip and see the market move back up. However, even doing that being said, we want to look at what our upside target is and where we think gold could go over the next week or so. And traders, the best way to really illustrate that is to look at this short term. This is a 720-minute chart. And there's no doubt we did get out too soon on this last trade, but we got out with a substantial profit. With that in mind, though, I truly believe we've completed this fourth wave. I believe that we are in a final fifth wave up. Again, this being very, very short term. And I'm looking at the peak of this particular rally to occur anywhere between 1292 and 1305. And that's based upon our fib numbers that we're currently looking at. So even if we do make a play at this point anywhere between 65 and call it 58, my upper level target on this trade is very, very close to our entry price, because as I said, I really don't believe we're going to see this market go much past around 1300. And to show you why I feel that, we need to look at one more chart on today's show. And traders, I've done just that. I've actually loaded up. This is our weekly chart with our longest term count in the market. And as I said, my sense is right now that we've completed a major A wave down. We are currently in a B wave up. This B wave is going to be composed of a intermediate count, and behind it a sub count. It is the sub count that we're looking at, and within the sub count, I believe that we are currently in a wave one, but then I also see these tops up here at about 1300. So when we consider the kind of move we saw, which is 1051 to 1300, that's a tremendous move in the market. That's a 250 point rally. We have genuinely not seen that kind of rally really since this market accelerated to these record highs. Here you've got the market trading about 1500 to 1900, so you had a much larger rally than this. But nonetheless, you typically get on a good bullish rally in gold anywhere between $120 and $140 move in the market. We have certainly taken that out. And so at some point, we will probably see this market retrace. And as I said, the top of the market, as I see it, is anywhere between 1292, which would be a 100% extension from the sub count of this one wave here to a high of around 13 to 1305. This has been Gary Wagner, wishing you as always good trading. We have certainly gotten it this year. We're going to look for some patience in the market to determine our next profitable move. Talk to you tomorrow for the weekly wrap-up.